Hello beautiful people, and welcome to this video session where I am going to be teaching you guys how you can effectively use trend lines for your technical analysis. So remember, I promised you guys I was going to do a video on how you can use these trend lines. So we are going to be talking about a few things, and we are going to start with what trend lines are all about. We are going to talk about the types of trend lines. We are also talk about where and when can trend lines be used. We are going to talk about how to effectively draw trend lines, and we are also going to talk about can trend lines be used as a standalone technical tool, and we are going to see how we can combine trend lines with other technical factors to make better trading decisions and to increase our profitability in the forex market or any financial market that you wish to trade. And also we are going to see how effective trend lines are in technical analysis. So by the time we are done with this our session, you are going to notice if trend lines are effective as a technical tool or they are not effective as a technical tool. So what we are going to start with is what trend lines are all about. And before we start, please, if you are not subscribed to the channel, please make sure to do that. Make sure to subscribe, make sure to like the video, make sure to turn on that notification button so that you don't miss any of the videos and updates that we post on our channel on a daily basis. So we are committed to your success in forex trading. That's why we make sure that we offer you top-notch services. And also you can click on the link on our telegram channel. It is found in the description below, and join our telegram channel where you will get access to a lot of great content on trading psychology and trading mindset. Worthy of note is that trading is actually 90% psychology and just about 10% strategy. So whatever you are doing on your charts, if you do not have the right mindset and the right psychology, then it becomes difficult for you to develop and grow yourself into that consistent trader that everybody is craving and that everybody wants to become. So we are going to start off with what trend lines are. And trend lines are simply a line. A trend line is simply a line that is drawn either from up to down or from down to up, connecting the highs or the lows of a price chart, giving price a sense of direction. So for a trend line to be effectively or to be known as an effective trend line, it has to have at least two touches for us to consider it as a valid trend line. So trend lines are simply, or a trend line is simply a line connecting two highs or two lows on a price chart, giving us a clear market direction in which the market is moving in. So remember, the market usually moves in trends, and that is where trend line gets its name from. And worthy of note is that trend lines are actually one of the oldest tools that have been used by forex or financial analysts to analyze any price chart on any financial instrument. And if you are to do intensive research on the oldest and the secret in forex trading, you will see that trend lines have been ranked as one of the highest secrets that are hidden in the forex market. So we can actually use our trend lines on whatever time frame that we choose to. So remember, we have in the forex market different types of traders. We have scalpers, we have day traders, we have swing traders, and we have position traders. And Depending on which type of trader you are, you will do your analysis on different time frame. Someone who is a position trader will not do their analysis on the same time frame as a person who is a scalper. So we are not going to talk much about that. We are going to integrate that into our content, and we are going to do a video on the types of traders that we have and the time frames that you should be looking to trading of as a swing trader, as a position trader, as a day trader, or as a scalper. So going back to what we are talking about, trend lines can be used on any time frame. So right here we have the chart of GBP USD, and we are looking at it on the monthly time frame. And if you see the direction of this market on the monthly time frame, we can all agree that GBP USD on the monthly time frame has a bearish outlook. So you can see from where the market has been moving. So from here we are a high, forms a low, forms another inner high, forms an outer low, forms a high, forms another one, forms another low. And we can see that this low, the recent low that has been created, has not been able to break above the previous high that we had above at this position. So the market structure on GBP USD on the monthly time frame shows us that we are in a downtrend on GBP USD. So if we want to draw our trend lines on this chart, then we should be looking at the direction in which the market is going to. All right, so let's say we want to draw a trend line on this time frame, then we would be looking to draw our trend line, which will be a resistant trend line. So we always have a resistant trend line and a support trend line. So we are going to be moving now to the types of trend lines that we have. So we have resistant trend lines. Let me include it here. So we have what we call resistant trend line, and we have support trend line. And in between a resistant trend line and resistant trend line and support trend line, amongst these two, we also have what we call inner trend lines and outer trend lines. So let me include it here. Let us make it as a sub. So you can always screenshot this so that you can do further analysis or further research on it. So we have inner trend lines and outer trend lines. When we are going to start implementing this on the chart, then you are going to see in real life what we are talking about here. So like I was saying, these are the types of trend lines that we have. We have support and resistance trend lines. So let us look at what support and resistance trend lines are all about. So if market is moving to the downside, then it continues to form lower lows and highs and lower highs. So we are going to connect our trend line from here. And one thing you should remember is that when drawing out your trend lines, you should look for the origin of the trend. Look for the origin of the trend. I think you should mark that out. And if you do not have a notebook to take it down, to be taking down notes, please make sure to get a book right now and start taking down notes, because this can help you in the long run. And you can also pass this down to your children, who will pass them down to their children's children, and so on and so forth. Do not think that your mind is a machine that will store everything. So where did this move, all this move that we have on GBP USD on the monthly time frame originate from? This is the origin of the move, and here we have that origin of the move that has pushed market right down to where we have it right here, and where market is trending at the moment. So we have GBP USD trending at 262478 at this particular moment when we are doing this video. And if I want to draw a trend line from on GBP USD, I'll be looking forward to starting that trend line from the origin of the move. So permit me, I usually like to do my analysis on my phone. You can do this on your tablet, on your laptop, wherever you feel comfortable to do your analysis. It is good. So I always like my areas to have these perfect touches so that I have good reactions on these points. So that is it on the monthly time frame. So remember, we said for a trend line to be considered as a valid trend line, it has to have at least two touches. So if you look at this chart at right now, this is our first touch here. This is the first touch, and here we have our second touch, and that is a valid trend line. So this is actually what we call a resistant trend line. Why do we call it a resistant trend line? We call it a resistant trend line because we see price lift from a low, comes up, reacts on it, gets resisted. So it can also be called a ceiling. It is resisting price from going higher. That is, it is rejecting higher prices and pushing price back to the downside. So we see price comes into that trend line, gets resisted from there, gets resisted, pushed down again, and what we are expecting at the moment is to see price come into this trend line and get resisted again from here to continue having a down move from here, creating another low. So we might see that move, we might not see that move. Remember that in forex trading, and if you have been following up on my posts and on my analysis that I usually do, you will notice that, or you might have heard me say that a broken trend line area or a broken resistance area can become support. So we can see two scenarios at this point. We can see the first one, price comes into this trend line, gets rejected from this point and gets pushed to create another low, breaking this low. So that is a validation of our downtrend. On the other hand, we can get a scenario where we see price comes up, breaks above this point, then retests. Let's say it breaks above, then comes back for a retest like that, and comes right back up to here. So those are the scenarios that we can have. So those are the excuse me excuse me having a little bit of technical issues here. So those are the two ways in which we can use trend lines on our charts. Okay, so please let me just check if we are still connected. Okay, we are still connected. Pardon me for that, just a technical issue. So like I was saying, we can have price move up to this point, get rejected from this point, or get resisted from this point, because this trend line is resisting price from breaking above it. Or we can see a scenario where it comes up, breaks, and moves to the upside. All right, so those are the two scenarios that we have, and that is the first type of trend line that we do have. The second one is a support trend line, and a support trend line will be used when the market is trending to the upside, and also we can also use this support trend line even when the market is trending to the downside, because when the market is trending to the downside, we usually have periods in the market when price is also buying. So even though we have a dominant bearish outlook on GBP USD, what you notice is that price does not just continue to fall. That is not how price moves. It moves. We have an impulsive wave, a pullback wave, an impulse, a pullback, an impulse, and a pullback. So what we are looking at right now on GBP USD can be termed a pullback move on GBP USD. And the next move, if we do get that good reaction from this point, is going to be an impulsive move. Sorry, it's going to be an impulsive move, and this is where we can be looking out to catch huge movements on GBP USD. So the next type of trend line that we have is our support trend line, and it is simply a trend line that will be supporting price. So let me look for a scenario where we can have a support trend line. So I like to play around with my trend line because we do not we can have areas in the market where we see price come into and react very nicely, and if we do not play around with this chart, then we can miss out on some of this move. So okay, this is a nice support trend line from here, and remember, what did we say? So some of you will be wondering why this has to come below, why I have to get this trend line to pass below this area. Okay, this week in the market, we just usually consider them as noise in the market. And remember, I told you guys that for a trend line to be considered as a valid trend line, we need at least 2 touches. And if you look at our trend line, our support trend line from here, what do you see? We have our first touch from here. That is our first touch that touches nicely. Then we have another second touch from here. And what do you see again? One thing you should note, please note that down, is that you need to see a significant move from where you have your trend line level. So I need to see price come into that trend line. I need to see previous action on that trend line show me that price came into that particular trend line and we had a significant buy or sell move from there. So here we are, the first area we saw price come into it, and what do you see? A significant move to the upside before getting pushed back to the downside. And when it comes back to this point again, what do you see? A significant move that pushes price back to the upside. And again, what do we see again? The third time price comes into that point, what do you see? It comes, moves into that point. So if you had established this trend line from the beginning when we had GBP USD moving to the downside, I think it's in 2022, then you would have been able to catch this move from here just with trend line. So the last topic we are going to look at is how effective trend lines are, and you can begin to see how these trend lines work out especially when you begin to combine them with other technical factors in the market. So when you draw out your trend lines like this, we have the first touch. This is the first touch. This is the second touch. And what do you see? This third touch comes and we have a significant move back to the upside. So why do we call this second trend line a support trend line? When price moves into this price level, what can you notice? It is supporting price from going lower. So it's like you standing on a floor, like on a story building, and the floor you are standing on is supporting you from going lower. So that is how price forms its support area, and that is how the support trend line gets its name. One thing you have to note again is that a broken trend line support area is likely to also become a resistance area. So let's take for example, if we get price to actually react from this other trend line from here, then gets pushed back to the downside, and instead of it reacting on this trend line to pull back to the upside again, we see what is called a break, and it breaks like this and maybe comes back to it, then retests that trend line and continues to the downside. So you notice that the broken support trend line now becomes our resistance trend line. So take note of that. A broken support area or a broken trend line area is likely to become a resistance area, and a broken resistance area is likely to become a support area. One thing you have to note again is that in a downtrend, note that down, please note that down. And if you're liking this video, if you're enjoying what we are sharing with you so far, please make sure to like, make sure to comment, and make sure to show us some love. So note this down, note this down. In a downtrend, right? In a downtrend, resistance areas are stronger than support areas. So it is likely for your support areas to get broken in a downtrend, and also in an uptrend, support areas are stronger than resistance areas. I know that sounds a little bit confusing, but we are going to take a look at it right now so that we clarify all your doubts. So we have price moving in a downtrend, and this is a support area from this point. This is a support area, and this is another support area. What do you notice about this support area from here? We see price comes, breaks it, and goes down. But what do you see when it comes up to this point? It fails to break. So our resistance areas are stronger than support areas. So if we are looking at what could happen immediately on the market, we can say that this area at this market will be stronger than this area. So there is more probability in a downtrend for this one to get respected and this one to get broken. And when we are moving to the upside, there is more probability for our support areas to get respected and our resistance areas to get broken. So please note that down. All right, with that said, let us look at the next thing that we have on our chart. Excuse me, just lost that. So I hope you did screenshot what we are looking out for, and so that you can also look at that. So we have looked at the different types of trend lines, and we said that we have resistance trend lines and we have support trend lines, and we also have what is called inner trend lines and outer trend lines. So as we move further downwards, we are going to see what inner trend lines are and what outer trend lines are all about. Okay, now we are going to be talking about where and when trend lines can be used. So you have to remember that the market has three phases. We either have the market moving in a downtrend, have it moving in an uptrend, or we have the market moving in a consolidation. And in a consolidation, we cannot effectively use trend lines. Trend lines are best used when the market is trending. Note that down. Trend lines are best used when the market is trending. Either the market is trending to the upside or the market is trending to the downside. You cannot come into a consolidation where we have price moving between two parallel support and resistance areas, and you want to to use trend lines on those areas. So let us take an example. So we are also going to talk about where trend lines can be used. Trend lines can be used on any financial instrument. So as long as you are a trader and you are trading the financial market, you can use them. It does not matter if you are trading stocks, you are trading indices, you are trading cryptocurrencies, you are trading the forex market, that is currencies. You can use them on whatever charts you are trading. And you should also note that for you to be able to use trend lines, you must be able to know how to effectively draw your trend lines. If you do not know how to effectively draw your trend line, then you don't get those good reactions that we are always looking out for in the market. So we are talking about where and when we can use trend lines. So let us say we have a market which is let us look at the first market phase. Let us look at a trending scenario where the market is trending to the downside. So remember, we will always have the market either trending to the downside, or it is trending to the upside, or we have the market in a consolidation. So if you look at what I am doing right now, what can you see? What is the market doing? Your first ability as a trader is to be able to recognize the trend of the market. So if you pick up any financial instrument, the first thing that I need to hear from you, the first thing that you need to know is the direction of the market. So looking at this market, would you say the market is trending to the upside or to the downside? I know some of you said it is trending to the upside, but those who said the market is trending to the downside, you got it right. So you can see clearly the direction in which the market is going. So if you said the market is trending to the upside, then you need a little bit of prayer. So I pray for you to have the eyes to see clearly. So the Bible says they have eyes but they cannot see. To not be like those who have eyes but they cannot see. So have eyes and see. Use your eyes. So we can say the market is trending to the downside in this scenario. And this is a perfect scenario in which we can utilize our trend line tools at this point. So if we want to use trend lines on this point, excuse me, the market is not always going to move perfectly like we see it moving like this. So this is just a prototype of it. So if we want to use trend lines in this market, then you see that it becomes easy for you to draw out your trend lines like that, and you have nice touches from that point. So there is something which I'm going to show you guys again, which is very, very important. So before we go to that, I just want you to note this down. Trend lines are very, very updative, because we can see a scenario in the market where the market creates a high. So if the market is trending to the downside, it creates a lower high, creates a lower low, a lower high, a lower low. And maybe we see a scenario where the market comes up, breaks a little bit, it breaks a little bit above this trend line, and instead of continuing to the upside, it pushes back to the downside. In this scenario, what do? You cannot still continue to maintain your trend line at that point. So what you do is you update your trend line. Either you blur the first one, or you completely change the trend line to incorporate the latest point that has been created in the market. So this is a perfect scenario where we have the market trending to the downside, and we are using our trend line tool to note the direction of the market. So let us say if we see price on this higher time frame, like we are looking at price, let us assume this our chart here is also on the monthly. As long as price is trading below this trend line, we know that price is dominantly moving to the downside. But if we begin to see price come breaks above this trend line, especially if we break again above this, break significantly above this high from this point, and our market structure shifts now from a downtrend to an uptrend, creating another high from here, creating a new high, and comes back down to create maybe a low. Sorry, this tool is giving us a little bit of problem, so let us just get a new one. So we see the market comes up, breaks above this high from here, creates a new high, and then comes back to form a low that does not break below this our previous low from here. So that is what we call now market structure, especially if we see it come and then fails to break up below this trend line and instead continues to create new highs. Now we can see market has shifted from a downtrend to an uptrend. Simple as that. As simple as that, guys. So please, if you are liking it, please make sure to hit that like button. Make sure to hit that notification button so that you don't miss out on any of our videos that we post. So now we have a scenario where the market has shifted. That is, it has shifted from a downtrend to an uptrend, creating higher highs and lower highs. So we create can now create a different trend line from here. Now we are already looking at the second scenario when price is trending to the upside. So we can now well connect our trend line from here to incorporate this area. So please forgive me, my areas are not really perfect, but that is a typical scenario where we can have price do that. Okay, so that is it. Now these are the scenarios when we can use trend lines on any financial instrument that we are analyzing. The next scenario that we have is and before we go, if again we see a scenario where price fails to maintain on this trend line, so remember this is a support trend line, and instead breaks below this low from here, breaks below the trend line, then we are begin to anticipate another shift in market trend or market structure. So we have a scenario where the market pushes up, comes down, then breaks structure to the downside, pulls back to the upside, maybe give a retest, maybe does not give a retest, and it continues to do like that. So you have to note all of that. If you are not taking down notes, please make sure you do take down notes. So let us look at the other scenario when it is not ideal for us to use trend lines. So let us say we have two support areas like this. This is a support area, this is a resistance area, and in this scenario where we usually call a consolidation or accumulation, we will have price coming up to bounce off resistance, comes bounce off support, comes bounce off resistance, back to support, back to resistance, back to support, back to resistance, and anticipating a potential breakout either to the upside or to the downside, depending also on the dominant market trend. So there are times in the market when we are going to see price consolidate for over months, like the scenario that we have on GBP USD at the moment. We have had price mostly moving in a consolidation since December. So guys, this is the scenario when we cannot really use trend lines as a method of analysis on our chart. Why? because we do not have a clear trend line or a clear trending market, excuse me. So just from the name, you can begin to tell trend lines, trend lines. So if the market is not trending, why are you trying to force trend lines onto the chart? Why? So until you see a scenario when the market is either trending to the upside or trending to the downside before you can use that. But there is also a probability for you to use trend lines on this chart. And when is that probability? If right now we are looking at this chart, let's say we are looking at this chart on the monthly time frame. If we go down to smaller time frames, so we can see that we can still have a scenario on the smaller time frame. Let's just assume that we are on a smaller time frame. The market will not move in a direction like that, so we'll have the market moving like that, 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 moving like this, and before getting to that area. So if we go down to smaller time frame, we can also have a scenario where we can utilize trend lines even within a consolidatory market. So now this begins to apply to what type of trader you are. So if you do not know the types of trader that exist in the forex market, you can always go and do a uh, short research on that, and I promise we are going to do a video on that. So those are the ideal scenarios when we can use trend lines perfectly and when we cannot use trend lines perfectly. So let us go now to the next item on our agenda. So I hope you guys are enjoying what we are sharing and you are learning a lot from it. So this is a complete analysis that we are already doing at this point. What I like to do is I like to use real life situations. I like to trade to teach why the market is moving so that we begin to see how these areas are used. Okay, so how to effectively draw trend lines. So I think we already talked a little bit about this, how to effectively draw your trend lines. For you to effectively draw your trend lines, first things first, you need to identify the market in which you are trading in. Is it a downtrend? Is it an uptrend? Is it a consolidatory market? And the second thing is you need to start drawing your trend lines from the origins of the move. And the next thing is you need to know that trend lines are updative and you need to keep on updating your trend lines as the move. So if you have not noted that down, please make sure to do that. First things, know the market you're trading in. Is it an uptrend? Is it a downtrend? Second thing, is it is my trend line from the origin? Third thing, how many touches do I need for a trend line to be considered as a valid trend line? Fourth thing, trend lines are updative, like what you just saw me do here. This is just a perfect example of updating my trend line. So we saw price come up, create a high from here that did not meet the trend line, and instead it pushed to the downside. So what you do is you update your trend line, and you can now go down to smaller time frames, and what you do is you perfect those trend lines. So I will come down to the smaller time frame and I make sure that I get those perfect touches, get all those areas perfectly touched. And one thing you need to note again is that depending on the chart that you are using, you are going to get perfect touches. So we are using IC market at the moment to do this analysis. That is because I don't want to distort what I already have on the other charts that I do my analysis on. So depending on the charts that you use, you are going to get different uh, different results or different levels of accuracy. So be always careful the charts that you use. Make sure you're using a good quality charting platform. So like I was telling you guys, within a downtrend, you can have a period in the market when the market is moving to the upside. So we begin to come now to the downside, and we begin to see now what we call outer trend lines and inner trend line. So here we have what is called an outer trend line. This is an outer trend line, and here we have an inner trend line. As simple as that. As simple as that, guys. So note that down. Outer trend lines and inner trend lines. So I hope you've learned a lot so far on how to effectively draw your trend lines and on a lot. So that is how we do it. So from this point, like I was saying, we have periods even within a downtrend when the market will be moving to the upside. So what you can do again is you can come in, utilize your trend line tools. This is my first touch from here. I make sure that I get that from the origin. So this is on the weekly time frame right now. We have our first touch and second touch, and here you go. Perfectly like that. Perfectly. We are not forcing anything. Note this down again. Do not try to force trend lines where you do not have clear trend lines. If it is not clear enough, then it probably isn't correct for you to use that on that point. Do not try to force trend lines on the charts. Okay, so that is it. That is it. I hope you're getting something, you're getting some value from what we are doing at the moment. You can see how we are utilizing only trend lines to get our moves. So if we go down to smaller time frames, you will see that this is a good bounce from here. If you had this trend line already established, first touch, second touch, you identify that this is a trend line area, then you establish your trend line from this point, then you get a good reaction from this trend line. So if you go down to smaller time frames, you are going to see how nicely it reacted again. So the first touch is right down there, and the second touch, what do you have here? The third touch, and you can see from where price is reacting on again. So that is the current trend line, that is the current support trend line that is holding GBP USD at the moment. So by the time some of you will be watching, the market would have shifted, and maybe this trend line will not longer be holding it. And also guys, note that you need to rearrange your trend lines to have those perfect nice touches. So I hope you see how I am arranging my trend lines. When I draw them, I make sure that I go down to smaller time frames and I rearrange them to have those perfect touches on my areas. So that is how you can effectively draw your trend lines on your chart to get those perfect reactions on it. When I move down to a smaller time frame again, like we move to the 1 week, and we included an inner trend line. Moving to the daily, we see another point in which we can include an inner trend line again. So this is it. I told you guys that we'll be doing it in real life, and you can see how this works. So if somebody tells you that trend lines do not work, then what you just do is just look at that person and laugh, because a lot of people think that because they have been hearing ICT, SMC, and all the other factors, you begin to minimize what has been. So as it was in the beginning, is now, and ever shall be, world without end. Amen. So as it was in the beginning with trend lines, so shall it always be. Okay. Now, I'm not saying that SMC, ICT, all of those other factors, they are wrong. Very far from the point. What I'm saying is that you can nicely use these trend lines also, and you still become a profitable trader. You can combine them with ICT, combine them with SMC, combine them with whatever uh, type of trader or whatever strategy that you are using, and you still get those good analysis. So here we have again another inner trend line. So this is our outer trend line, this is our inner trend line, this is another inner trend line. So what you can do as a beginner is you can begin to represent this with different colors so that you begin to know, is this one an outer trend line, is this one an inner trend line, so that it does not confuse you. So for the support trend line that is moving this market now, would you say it is an inner trend line or it is an outer trend line? I just heard somebody say it is an inner trend line, but sorry, you are wrong. So all of those who said that it is an outer trend line, you are correct. So this is an outer trend line, an outer support trend line that is holding this market right now. If we get a scenario where price did not come right down to this point again, but instead created a trend line from here, so instead created a position from here and then pushed back to the upside breaking structure, then would have established now an inner trend line from this point. So I hope you get that point right at the moment. So guys, if you would have had all these areas drawn in from the higher time frames and you did not include these inner trend lines, you would have missed out on this move, because this is the first touch. Remember, we said that for our trend line to be valid, it has to have at least 2 touches. So here we have our first touch, clean and nice. First touch comes again down, second touch nicely, and what do you see again? When price approaches that trend line again, this is where we got a nice sell on GBP USD. So this is where we had a huge sell on GBP USD, just using these trend lines, guys. So you can see how easy it is when it comes to analysis and when it comes to strategy or technicals. So anybody can master all of this that we are doing here, but where the problem lies now is in your own self. Guys, so let me tell you something. We as human beings, we are always the greatest obstacle in our own lives. If you cannot control your mind, if you cannot control yourself, if you cannot practice self-discipline, you cannot practice patience, then it becomes so difficult. So the problem is usually not the market, but ourselves. So that is why trading psychology and trading mindset are very, very, very important for anybody who is wishing to embark on this Forex journey. So if you are not yet part of our Telegram channel, please make sure to join our Telegram channel, because there we provide a lot of content and a lot of top value content on trading psychology, which is going to revolutionize your trading journey. If you join our Telegram channel, I promise you, you are going to uh, get a lot of value from that channel. Okay, so you have to note that down again, that trading is 10% strategy and 90% psychology. Okay, so guys, I hope you're liking it so far. I hope you are seeing how it is. So the last thing that we are going to talk about is how effective trend lines are, and just from what we are doing, you can begin to see if trend lines are effective or they are not effective. Maybe you've heard someone or somebody on social media tell you that do not use trend lines. Trend lines are that. It's because they cannot effectively use them. Once you can effectively use them, then you see that they are very great tools for you to use in your analysis. And also, guys, you do not want to underestimate the importance of top-down analysis with whatever method you are using to analyze the market. So what I mean by top-down analysis is that you start doing your analysis from a higher time frame down to a lower time frame, just like you saw us do. So I do not want to be teaching you this blindly, just coming to explain to you what this is, what that is, how to use trend lines, what are trend lines is. You can see how we are utilizing them as we are explaining. So the next thing that we are going to be talking at is, can trend lines be used as a standalone technical tool? So from all what we have been able to do at this point, have you seen us use any other market analysis tool apart from trend lines, or apart from maybe talking about uh, market structure? Have you seen us use any other tool? So now you are the one to answer that question for yourself. Can trend lines be used as a standalone tool in technical analysis? So look at the analysis very well. Look at it and tell me if trend lines can be used as a technical analysis tool, as a standalone technical analysis tool, or it cannot be. So please reply in the comment section. Tell me in the comment section if trend lines can be used as a standalone tool for market analysis or not. So please reply in the comment section. Reply in the comment section. I want to see those replies in the comment section. So I want to make sure that I am not talking to myself. I am not teaching myself, because as I am teaching you guys, the good thing is, as I'm teaching you guys, I'm also learning. And if you see that somewhere that I go wrong, or maybe somewhere that I am lacking, please make sure to mention that in the comment section. We are all learners in this game, and I'm always humble enough to receive your opinions and your own corrections. So please make sure to do that in the comment section. All right, so let us go to the next tool. I believe that you have already commented in the comment section if trend lines can be used as a standalone tool for market analysis. So remember, in this video we are not talking about using trend lines for entries. We have not talked about anything about entries, because when it comes to entries now, it is a different thing. So we haven't talked about entries in this video. We are going to look at how to use trend lines and to look for entries in another session. Or if you want to know that, because I don't know when we are going to be dropping that video, we actually have a lot of things to do also, and taking out time to do this video is not always that easy. It's because of the love that I have for this for trading, and the love that I have for you guys, and for the fact that my main goal is to see a lot of people strive in the forex market. So I want to see a lot of people removing money from the forex market. So this is actually a market, if you don't know, this is actually a market that anybody can get into it and begin to remove those huge sums of money. But before you begin to remove those huge sums of money, first things first, you need to learn, you need to get the proper knowledge that you need. So if you want to become part of our mentorship program, remember we are going to be launching a batch in April. We are going to be launching a training batch in April, and if you want to become part of that batch, it is only $50. So I've been explaining why it is that cheap, and so you can start getting yourself ready for that. I'm going to communicate further on that for you guys, so please start getting yourself ready if you want to start getting how to use trend lines to get entries and how to make money with trend lines. So guys, make sure to get yourself ready for that, because you are going to be learning a lot. You are not only going to be learning about technical analysis, you are not going to be learning only about psychology, you are going to be learning a lot, trust me. You are going to be learning how the human mind works and how you can use your mind to draw in abundance, prosperity, and how you can reprogram your mind for success. So it is something that you do not want to miss out on. So last but not the least, on Trendlines, so we can never always talk about everything, but we always make sure that we give you what is essential for your growth as a trader or as an aspiring trader. So combining trend lines with other technical factors. So when trading the forex market, there is always what we call confluence, and confluence is a scenario where we have two or more technical factors coming together to support an edge in the market. And what is an edge in the market? An edge is just simply an indication, a clear indication or a clear market indication showing you that the market is either going to move to the upside or to the downside. So confluence always comes in to give you a higher probability of that edge or a higher probability of one thing happening over another. So remember, trend lines are not the only tools that are being used in the market, and we have other things like support and resistance. So we have support and resistance that can be drawn horizontally like this. So these are horizontal support and resistance. So you come into an area where price has reacted upon and you put in that horizontal, and this is another scenario. So let's just let that fall for now. Let's just leave those two. So once you can combine your trend lines with your horizontals, then you see that where you have a trend line crossing a horizontal support resistance gives you that area of confluence. And the psychology behind this confluence, the idea of confluence is that where you are looking at those who are trading based off trend lines will be looking at that particular point to either short or to long the market. Those who are trading off support and resistance, like the ones we just drew in, these horizontals, will be looking out to short or long the market from that point. We also have things like order blocks. We have psychological numbers. We have fair value gaps. We have a lot of technical factors that we can combine them with trend lines for us to get accurate entries on the market. So let us look at a scenario where we had a good confluence yesterday, just to show you an example of what a confluence is in the market, so that when you're trading you can utilize both these tools for your trading success. Okay, so right at this point yesterday, where we had the market come up and sell massively to the downside, those who are trading off order blocks would have come into this area and mark out that area. And what is an order block? It is just simply the last candle before the huge sell movement. And one thing you need to understand also is the psychology behind all of this. So whatever you see in the market has a psychology behind it, and it is not you just recognizing this, but you knowing the reason why the market did what it did at that particular point. Because if you do not know what caused the market to move in that particular direction, then it is difficult for you to be able to replicate that again when you see that happen again. So there we are. We have an area. We have the last buy candle before the sell move, and what do you see that is particular about this other block. We have it break structure to the downside. We have huge